A very good morning to you and a happy new month. Karibu sana. This is a Money Monday, your go-to show for financial strategies. As a day-to-day person, we help you become financially independent in the future. And also for the business people, we give you strategies on how you can become a great entrepreneur each and every day. So the fact that it's a new month, we give you strategies so that you can become better. You can interact with us. Utazama ukiwa wapi, that is on 0799200100. I go by the name Angela Kabete. And as you know, the finance bill imekuwa on the spotlight. That is the whole of last month. Na pay month tutongelea mambo ya finance bill. And that's why today we are helping. Our topic is how will the finance bill affect your pocket? Generally, do you understand what is the finance bill? Ama unasikia tu ikitajwa ni like, I don't know what is this, but wacha tu ipitishwe. You need to understand that as a Kenyan citizen, because every year the Kenyan government introduces that is a finance bill that proposes changes in taxes, levies, and government revenue collection. And the Finance Bill 2026 has sparkled that is nationwide conversation because of some of its proposals that touch directly on each and everyday expenses for you as a common mwananchi. That is expenses such as digital platforms, mobile phones, digital transactions, imports, online businesses. And according to the Kenyan government estimates, Kenya continue to seek that is additional revenue to finance public services and to reduce borrowing and support economic growth. So the aim of all of this is support economic growth. What do you think about that as a Kenyan citizen? However, many citizens are asking one important question. Will these proposals ease or increase the cost of living? So make sure that you stick with us till the end, because we're going to answer that question. And also, apart from making you understand or helping you understand what is this thing that we call the finance bill, how the proposed taxes that is on the 2026 finance bill, also we're going to help you to understand as a day-to-day Kenyan citizen, as a business person, as an entrepreneur, how can you manage the season? How can you manage that in case cost, let's say for example matters to do with that is the digital entrepreneurship require affected. What can you do about it to a tourism sector? We're going to give you solutions and strategies. And to unpack this conversation, or to help you understand this thing that you call the finance bill, I'm not doing it alone. I'm honored to be joined by a man who is full of experience when it comes to matters to do with finances, because he is an accountant and he goes by the name CPA Kitur. He's also a financial consultant working with Bond and Drew Associates. Without further ado, help me welcome him to the show. CPA Kitur, a very good morning to you.
Good morning, Angela.
How are you doing?
I'm doing good.
Happy new month.
Yeah, happy new month to you. And happy Madaraka Day.
Yeah, it's Madaraka Day, by the way.
Yeah.
I've not seen what we celebrate on social media, but probably by the time you fika saa tatu, people will be celebrating it.
Sure.
Karibu sana.
Yeah,
I'm really honored.
Yeah, and thank you for the opportunity.
Okay.
To come and share 1, 2, 3.
Yeah.
Make a discussion on the issues to do with our public financial management.
Yeah.
Issues to do with finance bill and various aspects of public financial management in Kenya. Very important topic.
Yeah, you see, indeed it is, especially for this season. And because our topic ni helping Kenyan citizens and how the finance bill will affect the pocket ya common mwananchi pale nje. I know there is someone who is watching us and ajiuliza, what is this thing that we call finance bill? Well, can you help us break it down, or in simple terms, what is the finance bill?
Yeah, thank you, Angela. I can comprehensively first of all talk about the public financial management. That is basically the management of our finances in Kenya.
Okay.
Remember, money collected by government is public money.
It's true.
So that is public financial management, and it's a process. It's a cycle kind of what we are talking of, a budget being issued, to do with circular being issued to various sectors, various departments of government, where they come up with estimated revenues and estimated expenditure over the next financial year. Once now these sectors, the ministries, they call it MDAs, ministries, departments, and various aspects of the government come up with the estimated revenues, and then estimated revenues and expenditure, then the National Treasury come up with something known as public policy statement. Public policy statement basically consolidate all the estimated revenues of the government from the various revenue sources. We are talking about taxes, we are talking about appropriation in aid, which are basically income generated from the profit making aspect of the business, and then now the various expenditure in terms of money being sent to the counties, money being used by the national government in terms of ministries, departments, and issues to do with even payment of debts due to outside Kenya and within. So that is basically the expenditure aspect of the government, and the revenue aspect that they come up with in form of a policy statement. Once that policy statement, now once they see the estimated revenues and expenditure, they now come up with proposals. Proposals on how to get these revenues. So these proposals, remember, you cannot tax or you cannot charge a levy without compliance with the law. So they consolidate all these proposals in form of a finance bill. So once finance bill is passed, it becomes a finance act. This finance act give powers now for amendment to the various laws, specifically the tax laws. We have the Income Tax Act, we have the Tax Procedures Act, the Value Added Tax, the Miscellaneous Exercise Duty. All those are in the form of finance bill, which now when it is passed in Parliament, then it becomes an act. Once it becomes an act, now the various relevant laws, tax procedures, income tax, value added tax, are now amended accordingly via the finance bill, that finance act that has been passed. And that is where you find now issues to do with VAT Act. Some amendments have been done. If let's say VAT was to be increased from let's say the current 16% to let's say 18%, or even being decreased, that opportunity to be changed come as a result of a finance act which gave powers to the amendment of the VAT Act and the other tax laws. So through that now, government will be able to now collect the revenues. And when you look at the proposals which are being made in the finance bill, it's basically proposal to enhance the revenue collection. So I hope
it's to enhance generally.
Yeah, to enhance our revenue collection. And when you look at the theme of the keywords in as far as this finance bill 2026, it's basically to enhance compliance as well as to enhance the tax base. When you talk of the tax base, they are talking of taxing the untaxed, or even taxing persons who are supposed to have been taxed, but in one way or another it was difficult for them to be taxed there. And remember, Angela, in Kenya, as per the Income Tax Act, almost all the incomes are chargeable to tax, except those which have been specifically mentioned in the Income Tax Act. So, and you find in the past, because of inefficiencies, you find some incomes have gone untaxed because of probably inefficiencies or even tax evasion and the like. So when you look at this finance bill, majorly has been on the aspect of enhancing compliance as well as increasing the tax base. Increasing the tax base meaning now even those areas that had not been taxed, or even the tax rates have been at least low, being enhanced. Like when you look at issues to do with gaming and betting, there is a tax that has been enhanced as a result of that. Withholding tax being subjected to withholding tax. Withholding tax is a tax where it's before you pay. Let's say you have won a certain amount, Angela, so you are not paid the whole amount. So if let's say 100 million, then withholding of let's say 5% being deducted before you receive that amount. So you receive 95 instead of the 100 million that you had received. So those are the enhancements that have been made, and quite a number of others have been made in the finance.
Okay.
proposal.
I believe now the common mwananchi out there at least anaelewa what to mean by this thing that we call finance bill and how it's formed. But now let's talk about now that is the proposed finance bill, kwa sababu ijapitishwa, that is the 2026, right? And what are the proposals that are likely to have the biggest impact on the common mwananchi, or the current proposed that is 2026 finance bill? How does it look like?
Yeah, thank you, Angela. There are quite a number of proposals which have been made,
Okay.
But I'll narrow down to those which are directly affecting the common mwananchi.
Yeah.
Because when you look at the issue of value-added tax,
Okay.
which is a component in the finance bill that has been proposed for the changes in the VAT Act, we are looking at some items which was zero-rated being now exempt. You know, when you talk of the zero-rated and exempt, zero-rated VAT is being charged at 0%. Even the exempt, no VAT is charged. So it's like, again, VAT is at 0%. So zero-rated, when you are dealing with zero-rated items, you claim input tax. When you purchase an item, you are selling an item which is zero-rated. Remember, you are charging VAT at 0. So it's like you are not charging VAT. But there are VAT that they were charged on the items you purchased. So now, when they are zero-rated, you are allowed to claim the input VAT that was charged on the items you purchased. But when it is exempt, basically the VAT is a cost. So you don't claim for a refund. So when you look at quite a number of items which have been proposed in this, like even solar lithium batteries, they were zero-rated initially, now they are exempt. So if they are exempt, it means now whoever is dealing with that will not be able to claim input VAT. There are even issues to do with VAT on there was a proposal on VAT on money transfer services. So So it means now, once those are effected, then we are likely to see changes in the charges being charged. Yeah, that is now on the VAT aspect. There are even changes on issues to do with Tax Procedures Act, where the commissioner is now allowed to call what do we call it? Where waiver with the waiver of penalties and interest. There's a term, Angela, that I'm forgetting, and we had mentioned some few minutes ago. Amnesty. Actually, it's an amnesty. So amnesty, if there are penalties that have accrued as a result of probably you failing to file the returns, in the proposed bill, the finance bill, that has been proposed that the commissioner is now given that opportunity to give you amnesty, and you just pay the principal
like
tax.
Yeah,
so that is part of, that is under the Tax Procedures Act. There is also another component, Angela, issue to do with filing of taxes. They are saying that's been proposed. If this goes through, then it means you have to file returns. If you are to file nil return, then it should be filed 1 month after the end of the accounting period or the year of income. So in this case, if you are filing a nil, then it means you must have filed by the 1st of January.
And talking about, allow me to cut you short, talking about that is nil returns, tuliona social media wakisema that in the finance bill they're suggesting that there will be no nil returns. Is that true?
No, not as such. Initially, there was something that was made by KRA recently, where you are not allowed to file any return up to the 1st March. But that one has been done away with. But now in this finance bill, if it passes, there is a proposal to have a tax being filed by, if it's a nil return, you're only given 1 month period. So if for individual, that means by the 1st of January. Then for companies, those depends on the financial year. And so if you are filing a nil return and it's a company, if your financial year is, let's say, 1st August, then you are given up to 30th of September to file. So if it's ending 1st December, you are given 1 month. That is for nil return. Then now for these other returns, if it's not a nil return, again, the period has been reduced from 6 months to 4. That has been proposed to reduce from 6 months to 4 months. So meaning the filing of returns will have been done by 30th of April. As the case now, the current acts, as per the Tax Procedures, Income Tax Act, and the relevant acts, is that a filing of returns, whether it's nil or non-nil filers, is up to 30th of June.
Okay.
So those I've mentioned the proposal under VAT and the tax procedure. There are also some changes, Angela, proposal on exercise duty act. Remember, there are charges again on money transfers, issues to do with financial services, like you mentioned of withdrawal charges, non-financial services like even drinks. It's of the drinks for manufacturing actually, there is an exercise duty. So again, there are proposal to enhance the rates being charged. Like there is a proposal for I think hard drinks. There was initially it has been around 16,000 shillings per certain quantity. Then now it has been proposed to be increased from 16,000 to 18,000 per given unit of those drinks and other exercisable duties.
And to add on what you say, that is on the excess duty, there's been a discussion that is around mobile phones, and some reports indicate that proposal would replace that is several existing taxes with a 25% excess duty on mobile phones. And Pia, the government officials are arguing that this is a restructuring of taxes from an accountant perspective. Can you help the common wananchi understand this?
Yeah. So that proposal from 10% to 25%. So when you look at Angela, like for banks, when you make a transfer money, that is a mobile money transfer from a bank account, let's say to M-Pesa or even to an individual, normally you are given a breakdown of charges. There is the principal amount where the bank is charging you, let's say 30 shillings for withdrawing. Then there is a percentage, around 3 shillings, which is 10% of that that is 3 shillings, that goes as an exercise duty. So when they are talking about a proposal of an enhancement of that from 10% to 25%, then it means now instead of if we are making a withdrawal, let's say it's 30 shillings plus 10%, which is exercise duty, making 35 shillings, then that is 33 shillings. So 25% of 30, that is a figure is around 7 shillings. So instead of now 33 shillings, it goes to 37 shillings. And that is a proposal that is being made, and we are likely to see now costs being increased as a result of the changes in that exercise duty, and that is a direct cost to the common individual. Yeah.
So we'll go for a short break. Then when we come back to Tangalia, various sectors, Iji Tangalia, that is the SMEs, because I believe that in one or another they've been affected, and specifically to Tangalia the Mtumbo. Unajua Mtumbo mekiwa that is a tax, a proposed tax ya 5%. We're gonna check that. Alafu pia tutangalia that is the tourism sector, and in addition to that, apart from making Kenyans understand that is the finance bill, now we're going to help them know or give them strategies on how they can manage if this finance bill is passed, that is the proposed finance bill. So to you as a common wananchi pale and you're watching us, tell us, what is that one thing umelewa? You know, what is that one thing about the finance bill? Are you satisfied now to go forward with saying that is finance bill petition? Please talk to us. That is on 0799200100. Make sure that you stay tuned. When we come back, we'll continue this same conversation that is on matters to do with the finance bill. Stay tuned. Hi everybody, a very good morning to you. Welcome back, and this is our Money Monday. We give you strategies on how you can become financially independent as a day-to-day person, and for the entrepreneurs, give you strategies on how you can become a great entrepreneur, because at the end of the day, that is the goal. Karibu sana. And on today's edition of Money Monday, we're talking about that is the finance bill. How will it affect your pocket as a Kenyan citizen out there. And I'm not doing it alone. I'm back with CPA Kitur. He is a financial consultant and also an accountant working with Born and Drew Associates. Welcome back. And I love the way in the first segment we told you what is the thing that you call the finance bill, and also we mentioned the proposed taxes. And now on this second session, I want us to talk about something that is key, something that has sparked debate that is on social media. That is the digital economy, because there is a proposed tax on the digital economy VAT maker that is 16%. And the question is, as Kenya becomes more digital, do you think we are building the digital economy by taxing it? What do you think about it as an accountant?
Yeah, thank you, Angela.
Yeah.
And I want to narrow down to, when you look at the Income Tax Act,
Okay.
All incomes basically are taxable except those which have been specifically mentioned as non-taxable, as exempt, I mean, like donations for charitable institutions,
okay,
which are engaged in certain activities that enhances the public, enhancing the public good and the like. Those are exempt specifically, meaning so any income. And it has been difficult in the recent past. Now that the world is moving towards the digital reality, digital reality in terms of there are now platforms offering digital services. You can even buy, you can sell digitally, you can do your music, you can do your content creation, you can even do as a trainer, you can train, you can be a tutor, teaching or training individuals from various parts of the world. There is even issues to do with cryptocurrency, that is virtual money, and various aspects, virtual meetings being held, and the like. Virtual reality, all those Angela, those are platforms in which alternative platforms in which services, goods are being changed as a result of the physical aspect, where you could visit for training, you could visit a college for sending meetings, you do whatever. So that when you look at the world is purely moving towards the digital aspect, and that is an area that has been so difficult to task in the recent past, when that reality of moving towards that has happened. And even when you look at Kenya, in Kenya, there has been changes. We had a digital asset tax and the various being changed, being moved from this one. Now we are not taxing at this rate. This one is being done away. We are moving towards something known as supreme something tax, something, I'm forgetting that name. So the world is moving towards that. So, and people are earning money out of that, Angela.
So it makes it wants to be taxed.
And Angela, those are income that have not been specifically mentioned as exempt income. You know, it's an income. You are deriving a living out of that. So give government what is due to Caesar.
And you know,
it's an opportunity to that.
Let me reason like a normal Kenyan citizen out there. When it comes to matters to do with that is on a digital economy, and also the digital entrepreneurship, on matters to do with social media, and on the aspect of content creators. You know, there's someone who is anajuliza palenje. How does it qualify for me to be, what makes it worth, or what justifies it to me to be taxed? Let's say, for example, I'm a content creator. I've used my brains. You know, why should I be taxed on that?
What justifies, Angela, basically is the income tax. That the income has not been specifically exempt, therefore it has to be taxed. And you know, all the incomes are taxable, as I mentioned, except those which have been. So whether you are generating from physical activities or even from that is virtually, that is still an income. And the world, in fact, that discussion, when you look at the changes in tax laws throughout the world, it's basically introduction of taxes on the virtual realities in terms of virtual transactions being done and the like. So Angela, here you have used your brain, and you are able to create a content that is selling, and you are making money out of that. You are generating an income out of that.
Okay.
Yeah. So you may wish not to be taxed.
Yeah, because I've used my creativity as a Kenyan citizen,
Which is the same case as even let's say musicians who are doing it physically initially, where you not taught the tapes, you get money out of that. Now that is being done online, and you're able to generate income. And these content creators, Angela, and the people who are using the virtual platforms, online platforms, they are making money. And again, for that reality to come, again, the government has come in as a result of laying the necessary infrastructure. Like there is this fiber. Government has been spending a lot in terms of ensuring the infrastructure, internet and the like, is well distributed in Kenya. I remember the last regime of Uhuru, they were talking of internet super highway, something like that, ICT super highway, which is the same thing as this. I remember government laying down the physical fiber wires throughout various parts of Kenya. That is a platform being created. Now you as a content creator, you are able to go to the internet, do your whatever as a result of government laying down that. Remember, there are countries, Angela, like a country like Malawi, internet is a problem. Internet penetration is a problem. There was a time it was around 20%. So imagine you are able to create a content, but there is no third platform. So you'll not be able to upload or even to put that in the whatever. So as a result of you now being present in the virtual world, it's because of the infrastructure that
the government has laid.
Yeah.
Oh, okay, I see. And to those who are watching us, content creators, entrepreneurs, and the day-to-day people, what do you think about these matters to do with that is taxes on the digital career? Please talk to us on 0799200100. Also be glad to hear from you. And before now we give people solutions and strategies, that is the day-to-day mwananchi and the online content creators, the digital economy associated with that, to give them strategies on how they can adapt and adjust to this to make sure that this doesn't hinder them from growing. Let's look at that is matters to do with entrepreneurship a little bit, and specifically I'm looking at what ambao wanauza nguo za mtumba. There was a proposed tax here that is 5%. I'm sure that you're aware of that. And now when it comes to that, could you help us understand the reason as to why this was introduced and the impact of it to the direct consumer?
Yeah. Thank you, Angela. There are some aspects of taxes which are introduced for specific purposes. Like when you look at like second-hand clothing, the government has been trying. Even the last regime has been trying to at least enhance to encourage the local industries. Because remember, when we spend by buying, let's say, second-hand clothes which are imported from outside Kenya, it's a chain. They are whoever was applying those second-hand clothes from outside Kenya, when they are purchasing, the Kenyans are purchasing, importing. Whoever is importing at the second-hand clothes, it involves money. So it means if you are importing clothes worth, let's say 100 million. That is basically 100 million moving from Kenya to the country in which you are importing those goods from. So that 100 million has created employment, not in Kenya, but outside the country. So if you are importing from China, you have basically transferred 100 million to China. So government introduces such taxes for the purpose of discouraging imports and encouraging now the local. And remember, if the local can thrive, like we are able to purchase clothes manufactured from Kenya, it's a whole chain of employment creation. We have the factory, we have workers who are working in those factories.
But the cost of production is quite high. That is in our country. Probably.
Yeah, that is another discussion. That is another discussion in terms of issues to do with power, issues to do with even government access and the like, which the Kenya Association of Manufacturers has been having at discussion. So it's a process. Look at this goes in our table. You know, the government also wants to encourage, want to discourage exportation of raw hides and skins outside Kenya, was that instead of it being exported, it is retained in Kenya, and we use it to manufacture things like shoes, which we are using, which we are wearing in Kenya. So if that thing is successful, kind of, you know, it will create a whole chain of employment, direct and indirect, to people. So like that example of clothes, if we are able to enhance our efficiency in Kenya in terms of clothing, the manufacturing, will have created employment to persons in factory, will have created employment to farmers who are supplying cotton, will have created even employment to logistics, transporters of it could be cottons from farm to the factory, and then manufactured clothes from factory to various distribution. If that is done, then instead of importing second-hand clothes, then buying from local will make us good. And it's something that the government has been trying, I think, all the way from the Kibaki time. Yeah.
And now that means that if that is the case, it means that both that is the entrepreneur and also the direct consumer, that is the day-to-day mwananchi, wote watakuwa affected.
Yeah.
In one way or another.
In one way or another. Yeah, it will be affected. Like when you know now the taxes are introduced on clothing, directly it makes second-hand clothes expensive, and making it expensive, that may restrict even that may reduce even the number of clothing if we were depending on the second-hand, for persons who are depending, persons who are depending on second-hand clothes. So those are now the negative side effects of such.
Okay.
Yeah.
That is to our viewers. What do you think about that is the proposed tax, 5% on tumba? From what CPA Kitur has explained to us, it sounds like a good thing because I mean, mentioned matters to do with it's discouraging import, supporting the local market in our country, creation of employment and everything. But you as a Kenyan citizen, I also want to hear your thoughts. That is on 0799 200 100. And now before we give people the strategies, let's look at something that is the rental income. How does it look like currently on the proposed finance bill 2026?
Yeah, basically on the rental income, Angela, it has basically affected non-resident persons, not the resident person. And for tax purposes, when you talk of resident person, we are talking of wacha tuseme tu ni mtu wa kawaida, that is mwananchi wa mwenye amekuwa Kenya. I don't want to mention the various 183 days and the like, but we have non-resident person, somebody who is outside Kenya. Probably you may find an American investing in rental houses in Kenya, and then he or she is in America. Yeah. So those rental income he or she is earning, there are now changes in terms of the tax rates, but it's not affecting the mwananchi. Also with the mwananchi, the rates become still at rental income being taxed at the rate of 7.5%, and which was a reduction from 10% initially. So basically it's not directly affecting the Kenyan person, but non-resident person, a foreign investor investing in Kenya. Probably we may find now indirectly affecting mwananchi in the sense, if an investor sees the tax rates in Kenya is high, that person deciding to make the same investment outside Kenya, then it means now we lack that employment which could have been derived as a result of that. But that is a minimal disruption when you look at the entire space of rental, where even the local can still do the rental income and the like. Yeah. And eventually, there is something that I want to mention. When you critically look at the finance bill, nothing much in terms of disruption, like yes, it has happened in the past. Like we had the finance bill 2023, which came up with a lot of disruptions. But when you look at this, it was around 2023 or 2024, 2023, when the government came up with some implemented something known as national tax policy. National tax policy, it's a policy that wants to kind of stabilize issues to do with taxes. Like a situation where we are talking about this year, let's say 30%, or even 16% VAT, next year 18%, the other year probably 13%. That instability is being cured by the national tax policy, which was implemented from, I think, July 2023. So when you critically look at this finance bill, critically look at it, there is kind of it's more of enhancing efficiency than even increasing the tax rates. Enhancing efficiency. Efficiency means now even the areas which were not taxed there, government is now moving towards taxing, so long as it's a taxable income. It's an income that has not been exempt in the Income Tax Act. So that is what the government is trying. And that I started by telling you, when you look at the theme, the keywords of this finance bill, they are talking over enhancing the tax base and enhancing compliance. And enhancing compliance issues to do with currently there is a discussion of e-teams. E-teams, it's a situation where, Angela, and when you are dealing with business, when you make a payment, ensure you are given an e-teams receipt. So that e-teams receipt, it means when at the end of the year you are claiming reduction in the tax, your income, so for you to get the taxable income, you will have to have validated expenses which are in the systems of KRA.
Okay.
Yeah.
And I love the way you have helped us understand that is the proposed levies or the proposed taxes that is on the Finance Bill 2026. And now, briefly, because of time, let's give solutions and strategies to each sector. And let's start with that is the small businesses, because I don't know another they're being affected by these proposals, because it means that they'll need to adjust. So what would you advise to mtu ambaye ameanza pale biashara and then there are these new introduced tax? What could they do so that there'll be sustainability of these businesses?
Yeah. Thank you, Angela. And that is why I was mentioning one of the strategies basically, and it goes with the theme of the Finance Bill 2026, that is basically enhancing compliance. It's basically when we have the persons who are SMEs to ensure they make compliance in terms of issues to do with e-teams, issues to do with proper bookkeeping so that when at the end of the year you are claiming the expenses you incurred, you are able to justify those expenses. And I want to encourage our businesses, every payment that you make, ensure that you are given e-team supported, because government is moving towards compliance and enhancing the tax base. And that is why when you look at recently, most people were able to receive messages from Kenya Revenue Authority in terms of taxes which are due. Remember, already because of this technology the KRA is using, they are able to even see you in terms of the incomes that you are earning and probably expenses that you have incurred in the business that you are doing. So the first strategy, basically, you ensure you do proper bookkeeping. You ensure issues to do with e-team supported expenses and probably payments, e-team supported payments. When you are making any payment, like you may pay, let's say, a rent for a business, that person you are paying rent, he or she is supposed to give you an e-team supported receipt. That e-team supported receipt is reflected in the system. Another strategy, basically, Angela, is now looking at the specific sectors in which an individual is, and now playing around the taxes in terms of ensuring compliance with the tax requirements of that specific sector he or she is. Through that, you will be in good books with the authorities. Was Angela, government has enhanced issues to do with tax collection. Government, can I say government is basically desperate to ensure they reach the level of the income that the revenue that they want. Like when you look at this year, they estimate to collect 3.5 trillion Kenya shillings from from businesses in Kenya.
That's a lot.
Yeah, it's a lot.
Okay.
So,
And if that is the case, we're talking about, at the end of the day, they cannot collect this money if, let's say, for example, right now, your finance bill ipitishwe, and let's say 60% of businesses in Kenya, they feel like this is too much and you need to shut down these businesses. It means that they'll not be able to reach the target. Why? Because there are some of the businesses that were not able to survive under this proposed finance bill. So on the aspect of sustainability of the business, what would you advise an entrepreneur in terms of adjusting to this to make sure that the business still continue thriving despite new taxes being introduced?
Yeah, thank you. Basically, when you look at enhancing basically the revenue base of when the government is enhancing their tax base, we as business people, we also enhance our revenue base.
Okay.
And Angela, it has been quite unfortunate. Surely some businesses have had to collapse because of non-compliance. Or even being expected to pay an amount from KRA in form of penalties and the like, which the business is not able as a result of what they are doing. So basically that ensuring compliance as well as even enhancing the revenue base of the businesses and those businesses, and as well as even managing the expenditure aspect of the business. Yeah.
What about the people on the digital platforms? What should they do? Because there's something that it's new to them, something that they have not been doing, and what should they do generally?
The fortunate thing, Angela, with the digital whatever, is that most of the taxes which are being charged are basically withholding tax. Withholding tax, it is deducted at source. So whoever is paying that is a content creator, deducts the amount due from that content creator. Like if the value of the services that you have offered digitally, Angela, let's say it's 100 million, whoever is paying you that amount, if it's Google, YouTube and the like, they are deducting the withholding tax. So, and the reason why even that withholding tax was introduced is basically to simplify. Instead of you doing the calculation is done on the other side, then you are given the net. Then you on your side, you now ensure that you capture the revenues and then you capture the expenses. Through that you are able to account for the tax due at the end of the year. And again, if you have reached the threshold of items like value added tax, ensuring that you comply with those. And in most cases, for compliance purposes, you can even consult financial consultants, tax agents which are there, or even a person visiting KRA. Because now with this issue of digital application by KRA, technology being enhanced by KRA, almost all of us will be in the radar of the KRA and will be expected to pay our share of taxes, a fair share of taxes.
Wow, that was quite wise, and I believe that what wameelewa matters to do with compliance, the reason as to why you need to comply, pay taxes as a Kenyan citizen, and also I believe that we understand what you mean by this thing that we call that is the finance bill. Thank you so much for availing yourself of the show. Probably you can share your contact, matters to do with financial consulting. If someone is interested, atakupata wapi?
Yeah, thank you, Angela. I'm from Born and Drew, which is an audit company. We are available in very major towns in Kenya. Personally, I'm in Nakuru. My contacts are 0723 46 70 20 for tax purposes and financial advice. Welcome.
Thank you. I'm sure atakutafuta. And thank you so much for availing. Thank you so much for making sure that you two, for today's show, we are really honored that you made that effort, and I believe what matters to do with the finance bill umeelewa. But I'm sure kuna watu wameachwa na maswali, and also I'll ask you these questions as we wrap up the show. The fact that umeelewa the finance bill, and what do you think when the future generation looks back at the finance bill 2026, will they see it as a necessary economic reform, or a burden to the common mwananchi. What do you think about it? Talk to us at 0799200100. I'll be so glad to read your comment. Always here every Monday to making sure that you as a day-to-day person will help you become financially independent in the future. And for the businesses people, I will give you strategies on how you can become a great entrepreneur. I'm Angela Kabete. Till next time, bye bye.